From the morning reading, conditions are bad in the mining sector. So bad that two of the leading players just resorted to the last-ditch effort of suspending the dividend payments. This is an extremely rare occurrence that typically happens after horrid declines and questions about their status as growing concerns. By the time sentiment has gotten this ugly, it has marked the final exhaustion in the last two down cycles. High-yield investors have been getting nervous about some of the funds they're holding. A PIMCO fund focused on short-term high-yield debt just traded at one of the largest discounts to its net asset value in 4 years, something rarely seen in ETFs. It has typically coincided with short-term panic conditions. The S&P 500 is now negative year-to-date. Heading into the last 3 weeks of the year, perhaps that will spur some buying among bargain hunters. Looking at other times it has occurred, though, returns were not exceptional. It has been better during recent history, but generally the last few weeks were better when stocks were already positive on the year. Hello, this is Stephen Harris, a head trader from Falcon Global, where we model best practices for investors, traders, and day traders from entry to exit every trading day. In this daily video, I provide my opinion and insights of current market trends, market timing, volatility, and hedge risk levels for the upcoming day for the key U.S. financial markets. It is 7:18 a.m. Central Time, and I'm recording this in preparation for the market day of December the 10th, 2015. Full disclaimers are at the end of the video, but be aware that this is for educational purposes only, and only you are responsible for the investing or trading decisions that you make. So let's go ahead and dive into the morning report. And kind of mixed and kind of near scratch. There's nothing really a big note here. At the time of this cut, the S&P futures were down just marginally. Russell was down about 1/3%. NASDAQ was up marginally, and the Dow was down about 1/3%. Crude oil up about 0.2, euro down about 0.6, bonds down just marginally, and gold down about 1/3%. In overseas action, it was consistently negative. China down about 0.5%, as was Hong Kong. Japan down about 1.3%. Germany essentially scratched, and the United Kingdom down about 1/3%. In terms of macroeconomic reports for today in the United States, you have import prices, the weekly unemployment claims, nat gas storage, and the 30-year bond auction. For tomorrow and looking ahead, we have several important reports. We have core retail sales, PPI month over month, and retail sales month over month. Core PPI, and then during the market hours, you have the preliminary University of Michigan consumer sentiment, followed by inflation expectations. So a bit more activity today and tomorrow. In terms of current volatility conditions, you had with yesterday's action a standard deviation move put in by the NASDAQ in terms of price action, but in terms of implied IV percentiles, still, while somewhat elevated compared to recent conditions, still well below even the lower third, 31 on the S&P, 27 on the Russell, 22 on the NASDAQ, and 33 on the Dow. Short-term VIX has popped. It's up to a 22.07. And while conditions are up, there's still, these are not a heavy dose of fear that's being priced into the market. So we're certainly seeing what we would call warning signs as these numbers start to elevate, and especially the short-term VIX coming up over a 20. Skew has remained elevated for an extended amount of time here. So all this certainly builds into that expectation that something is, not a healthy bull for sure. And indeed, nowhere were healthy bulls seen yesterday in the SPX. You see big range, and we had primarily a negative day yesterday. It did come up off the lows, which is somewhat a bullish relief, but certainly this is the lowest close in recent action. And while we've had now 1, 2, 3, 4, 5, 6, 7, 8 relatively large range days in a row, this is the lowest close of all those. So starts calling into question this 2020 area. and that we might visit that area. And if that doesn't hold, it could get really, really ugly really fast because there's not an awful lot down here. As fast as we went up through here, you could have it kind of melt down back through this and come back to this double bottom area just as fast. So if that 2020 area doesn't hold, things could get pretty ugly. In terms of the Russell, pretty ugly action here as well, and it's just about back down to that swing low. It will not take much action to get it back to the former swing low. NASDAQ has been holding up as relatively the strongest, and it's still a good bit above that prior swing low. And the Dow very much like the S&P. In terms of VIX futures, you've seen the last 3 days pretty significant increase. And yes, yesterday, this is yesterday's candle, this is today, remember this is VIX futures, so it's already open, saw a new intraday high being put in at right about a 19.4, and then today it's ebbed off a little bit, but still retains a relatively elevated area around 18.71, so clearly above the 18 threshold that we like to kind of paint as you know, that the land of the bulls. And then let's take a look at bonds here. So a lot of volatility as we head into the Fed announcement, and not likely to stop anytime soon between now and the Fed announcement. Let's go ahead and go to the daily report. This is getting more and more ugly. I seriously considered elevating the hedge risk level to level 2, and basically we could call this level 1 plus. I mean, it was all but necessary to go ahead and elevate this level one more time. Market trend intermediate term phase opinions currently at phase 5, which is a break of diagonal and horizontal support. IBD status remains uptrend under pressure. This could go to market and correction within a day or so if things continue to deteriorate, especially in a big way. Accumulation distribution, S&P is a D minus. The NASDAQ is also a D. GMI index also dropped another notch to a 2 out of 6, and this is within a day of also going to a sell signal if we have a significant weakness. Primary market condition remains a neutral bear. When you look at the stock charts decision points, no changes from yesterday, but this decidedly the short term is pretty ugly. S&P, Dow, nothing of positive there. S&P 100 still holding on to a green arrow in the trend model signals, as is the NASDAQ, but really pretty messy all the way around. If you add all this up with the intermediate term now being very bearish, all of these signals here are painting for a market in transition in the waiting for us to break out of that ascending triangle or symmetrical triangle, depending on which index you're painting. And each one of those is now starting to look more decidedly bearish than, you know, the bulls might hope for. So these conditions continue to slowly but ever so certainly deteriorate. So that's got to be certainly taken into account. Position sizing opinions are now at 50% on both systems. Intermediate term market posture is very bearish, and you see the S&P and the Russell in very bearish territory. The Dow and the NASDAQ a slightly better score and still retaining their bearish opinion. In terms of that hedge warning status, as I said, think of this as a level 1 plus. We are terribly close to going to red light, and certainly a condition of elevated risk conditions where you start to take an increasingly aggressive role with hedging activities and perhaps even exiting. Certainly not looking to initiate new bullish positions at this point unless you're the most aggressive of aggressive traders. In terms of the specific metrics, you see under volatility, there's a lot more red here than there is black. Market in decline, sharp increase warning. VIX futures up over 18. Distribution day count. NASDAQ's now at a 9. S&P at an 8. It'll take a few days just to ebb those off back down to more levels, more normal levels. Current week out expected move is a 55, obviously pricing in some volatility heading into next Wednesday. Look at this new highs, new lows in the New York Stock Exchange, 475 on the new lows. All 5 of the risk aversion indicators are risk off. The fear and greed is continuing to tick lower and lower each day and is certainly down in the fear category at this point. In terms of special opinions, option income strategies, the VIX is in first day outside the acceptable window to initiate new positions for novice traders, and then also cover calls and put selling also not acceptable to initiate new positions for novice traders. Aggressive traders might want to consider constructing very, very defensive type positions and take advantage of this elevated premium, but you've got to be prepared for the adjustments and the increased size and number of delta and vega moves against your position. In terms of sector specific, pretty much getting close to a sea of red here, short to intermediate especially, and bleeding into the long term. Only materials and especially consumer staples holding on to some semblance of healthy performance. In terms of yesterday's action, you see the materials had a 3% improvement yesterday. Energy was also up. Utilities essentially scratch. Those are kind of a mixed set. Certainly, if we're getting defensive, you expect utilities to hold on better, and some of these higher beta areas to take the biggest hit. And that's largely the story. But interesting here that materials and energy were strong yesterday when everything else was so weak. Okay, I think that's enough for today. And in terms of special offerings, let's see here. I think I will talk a little bit about this one today. Obviously, one of the things that you'll find us doing in Falcon Global in our live trade chat room is to apply these principles into our daily trading. We model those trades from entry to exit every day. We got a whole bucket full of different strategies we use according to the market conditions. But we do use equities, ETFs, and options, and we have a dynamically hedged portfolio. So I noticed from the morning reading, of course, the S&P is now negative year to date, so not been a great year for core portfolio holdings in terms of being able to make any kind of headway whatsoever. Option income strategies, of course, have been doing very well this year, and that certainly would be where we would point to most of the productivity of late. But if you'd like more information, just go to this hyperlink up here, and you'll find that there's a video and other information. All this in this room, and plus all the various member resources, the daily reports and so forth, all are available for a very modest $50 a month. If you find what you're getting here each morning is helpful to your trading, we greatly appreciate you acknowledging that, because this is a free video each morning, and this acknowledgement goes a long way towards encouraging us to continue. But subscribe to our YouTube channel. That also gives you a heads up when content has been posted. And then, of course, you can like us on YouTube. You can retweet us to your Twitter followers, to your StockTwit followers, and the other social media platforms you see here as well. Direct commentary and feedback can be sent to support@falconglobaltraders.com. Disclaimers, as always, hit the pause button if you need more time to review the disclaimers. Also note the hyperlink down here at the bottom, which takes you to the full disclosures. And we'll look forward to seeing you back here tomorrow morning before the market opens with the Falcon Global Market Preview. Good trading.